G'day there, Ray Corcoran here. So in this week's video, we're going to be going over the 5 biggest Vanguard index funds. So you may have heard about Vanguard. They are kind of known for being one of the, obviously they're one of the largest providers, but they're also just known for doing low-cost diversified index funds. It's something they're very well known for, and it's kind of a popular option for a lot of investors, especially just everyday people, because they kind of get exposure to a large number of companies or a large number of sectors, and it's kind of something that's easy for them to buy rather than them picking individual stocks. And as we all know, low fees are crucial to long-term positive returns. It's not the only factor, but it is very important to make sure that we don't erode any upside by having crazy fees that kind of negate that. So in this video, we're gonna go over the 5 biggest ETFs from Vanguard in terms of assets under management. Now, as I've said in the past, this doesn't necessarily mean that it is the best option for you to take just because everybody else is doing it. We do know that just because everyone else is jumping on something doesn't necessarily mean that it's going to be a good idea for you. And also, I'm not a financial advisor, so I can't recommend any of these ones, but I'm going to go over the publicly available facts for each of these ETFs, just so you can educate yourself and learn more about what they actually invest in, what their fees are, and all that sort of stuff. And as always, if you like the video, please give it a like. And if you want to subscribe, I do weekly videos on personal finance. So the first cab off the rank we have is VAP, V-A-P, which is a Vanguard Australian Property Securities Index. So this one has approximately, at the time of filming, $2.38 billion under management, and it has a management expense ratio of 0.22. And with management expense ratios, it basically means that if it's 0.22%, then that means that you would pay $22 in fees for every $10,000 that you invest. So overall, in the scheme of things, this is relatively low compared to more actively managed funds where you can pay 1%, 2% and above. So in terms of the top 5 holdings, it has stuff like Goodman Group, which is one of the biggest, or it is the biggest part of it, Dexus, Centre Group. So as the name suggests, this one does invest in property, so Australian REITs, so Australian Real Estate Investment Trusts. And basically the kinds of things that they invest in is stuff like warehouses, office space, shopping centers, retail spaces, business parks, all those sorts of properties, they will invest in those. So you can kind of get exposure to property through the stock market. And in terms of performance, obviously Australian property has gone pretty crazy over the last few years, but I'll put the graph of the performance on the screen now so you can check that out. Coming in at number 4 is VHY, which is Vanguard Australian Shares High Yield. So this one has assets under management of $2.79 billion and has a management expense ratio of 0.25. So this one invests in Australian shares, and it's targeting high dividend paying shares. So people that are looking for higher dividends, this one can't recommend it, but may be something that you may look at. In terms of the top 5 holdings, it's got a lot of the biggest companies in Australia basically. So it's got stuff like BHP, Woodside, Westpac, NAB, CommBank, those sorts of things are some of the bigger holdings in this one. And in terms of performance, we'll throw that up on the screen now. And one thing I have noticed with a lot of these different ones is that a lot of them do trend up over time. So if you look at it over a long enough time period, many of these will go up. Now, past performance, as they say, is not a reliable indicator of future performance, but it is interesting to note that most of them do go like that over time, but obviously there's some big fluctuations often along the way. Coming in number 3, we have the Vanguard US Total Market Shares Index. It's a bit of a mouthful, and this one is ticker symbol VTS. So this one tracks North America. So it has about 4,000 different companies. So, some of these ETFs may only have like 100 companies or 200 companies. This one has quite a lot more than that, has a few thousand companies within it. So, that's a lot of diversification, and you're gonna get exposure to a lot of different industries in the States. In terms of funds under management, it's got $2.98 billion at the time of filming and a management expense ratio of 0.03, which is one of the lowest you'll see. In terms of the top 5 holdings at the time of filming, you've got stuff like Amazon, Apple, Google, Berkshire Hathaway, United Group. So there's a number, heavily tech weighted at the top. A lot of healthcare in the States as well in terms of healthcare companies, not actual healthcare. And I'll just put the performance numbers over the last few years up on the screen now so you can sort of check that out. Obviously in the last couple of years have been especially volatile for a number of these, for a number of individual stocks, obviously, and some of the ETFs, obviously, that's flown through to those as well. Coming in at number 2, we have VGS, which is the Vanguard MSCI Index International Shares ETF. So basically this one is all the world, excluding Australia. So if you want to sort of, a lot of people in Australia, they favor investing in their own home market. But if you're already doing that in some other way, but you want exposure to everything else, basically, this is a product that may satisfy that need. In terms of funds under management, it's $5.2 billion, and the management expense ratio on this is 0.18. In terms of the top 5 holdings for this one, again, it's very heavily American weighted. So it's going to be Apple, Amazon, Alphabet, including Google, Berkshire Hathaway, and the United Group. And we'll put performance up on screen now. One of the interesting things is over the last year, it's had a bit of a tough time, like many of these individual stocks and ETFs have had. But you'll notice zoomed out over 5 years, the trend is still going up. However, last year has not been great if you've been invested in this one. And coming in at number 1 is the big daddy of them all. It's Vanguard Australian Shares, VAS. So this one tracks the top 300 companies in Australia. As you know, Australia is very heavily weighted around financial services. So you got all your banks, resources, and that sort of stuff. This one has a whopping $12.47 billion under management and has a management expense ratio of 0.1. In terms of the top 5 holdings, you got BHP Group, CSL, Combank, Westpac, and NAP. So I hope you found that useful. Before you do any investment, please consult a professional. Don't listen to idiots like me on the internet. And if you have any thoughts or comments below, please let me know. And other than that, I'll see you in the next video. Cheers.